Hi everybody and welcome to the non-farm payroll live trading webinar hosted by Swap Hunter and Forex Cube. My name is Christopher Smilas. I'm the head of training and sales at swaphunter.com. I've been a trader, professional trader for over 10 years now. So I'd like to sort of share this live trading event for the NFP today with you guys. What I've been doing over the past 10 years is trading pretty much, as many hours as the day can throw at us. 16-hour days trading in front of the charts for the past 10 years. So I just want to sort of impart and share my knowledge with you guys, beginners, intermediates, even advanced traders out there who are taking part or attending the webinar tonight. So I've done a lot of portfolio management over the years. I've also worked for and with a lot of different brokers over the years, and so I feel quite comfortable referring and suggesting brokerages for investors, new clients, existing clients of mine, who to invest with and use their trading platforms and which brokerages to use. So I just want to get across that even after 10 years of trading on the markets every day, I still find myself learning new things. Okay, it's almost like learning a musical instrument. You never stop getting better at it. You never stop learning, and you can never stop improving or learning new skills and strategies. So that's part of the reason why I do these webinars in association with forexcube.com, and that's why we offer these educational webinars. That's part of the purpose of everything. So my goal really is just to speed up the process for any newbies or beginners to Forex and sort of help them along their way into becoming more seasoned, more experienced traders, and learning how to adapt, how to react to very volatile events like the non-farm payroll. The non-farm payroll is if you're already part of a brokerage or you're already invested with a brokerage, you will be getting a phone call today, or you would have got a phone call at some point this week saying that the NFP, non-farm payroll, is happening this week. It's kind of like the World Cup of trading. It's the first Friday of every month, which is today, obviously, and it is a big market mover. It's just, if you're watching Bloomberg or if you're watching CNBC, it's just generally referred to as Jobs Day. Okay, so it's jobs data. So we have non-farm payroll, we have unemployment rates, we have wage growth, labour participation. We're going to cover all of those things, but we're going to mainly focus on non-farm payroll. Now we're using the GoToWebinar app. Okay, so if you have any questions while I'm going through this live trading session, what can you do? Okay, you can write a question in the live chat in GoToWebinar. Okay, or you could also raise your hand. There's a function where you can raise your hand to ask a question. If you do that, make sure your microphone is switched on, and you'll be able to then come live onto the webinar and start chatting and ask your question live and start interacting with myself live on the webinar. During the webinar, everybody will be able to hear you, so if you're comfortable doing that, then use that function. Okay, so we're looking at the non-farm payroll coming out in about 26 minutes. So I just want to cover a couple of things before the data comes out. Okay, first and foremostly, risks associated with Forex trading. Now, any reputable brokerage will make it very clear to you before investing that just the risks involved in Forex trading. Okay, so essentially, the message we're trying to get across here by highlighting and putting in bold, don't invest money you can't afford to lose or risk on the markets. Okay, so what I mean by that is don't don't borrow money. Don't take money, loan or borrow money on a credit card. Don't use your last $1,000, $10,000, $100,000 to invest in Forex, thinking that you're going to become rich overnight, because it's not a realistic, idea. Okay, so just don't invest money that you can't afford to risk. So basically, what we're looking at here now is the economic calendar. Okay, now I just want to cover what the non-farm payroll is. Okay, now non-farm payrolls, essentially it's a figure that is put together by the United States Bureau of Labor Statistics, and they represent new jobs being created from the previous month. Okay, so these are non-agricultural jobs, so non-farm payrolls. So we're talking about the private sector. We're just talking about non-agricultural sector. Okay, so not farmers and apple pickers. Okay, for instance, we're talking about jobs in the private sector, anything from really working in McDonald's to banks and car manufacturers and all sorts of different companies that are offering new jobs, or new jobs that have been taken from the previous month. Okay, now we have, as you can see on the screen, we've got the non-farm payroll here is a very high impact event, first and foremostly. Secondly, we've got the previous, so last month's result printed at 136,000. Now we've got a consensus or a prediction, okay, which is put together by the economists and analysts at the Bureau of Labor Statistics. Now they put together this prediction of how much they think or what the data print is going to be, what they think the data print will be. Okay, in 23 minutes exactly. So the reason, how do they come up with this consensus? Well, it's based on things like fundamental analysis, what's been happening in the labour market as of recent. Let's have a look at that. Okay, so General Motors in America, massive strikes. Okay, so I'm assuming that because of these huge strikes in America, that we're looking at a much lower print, of 90,000 or 89,000, because of things like this, strikes. Okay, so let's see. And another thing that's worth mentioning, actually, with a very low consensus, how you use the economic calendar is not if the data comes out better than the previous data. Okay, that's one thing, but it's more important that it beats the consensus. Okay, so if it beats the consensus, you're going to get a stronger reaction on the dollar. Okay, now if it's higher than 89,000, you're going to get a stronger dollar, and the euro dollar will go down, the dollar yen will go up, gold will go down. If it's lower than 89,000, which would be it would be a very, very low reading, so if it's lower, the opposite. Okay, euro dollar will go up, and dollar yen will go down, and gold will go up. Okay, so just to summarize, if it's stronger, a stronger dollar. So euro dollar goes down with a stronger dollar, dollar yen will go up with a stronger dollar, and gold will go down with a stronger dollar. If it's a weaker print or lower than 89,000, then we're going to get a higher euro dollar and a lower dollar yen, sorry. And you'll also get gold probably rallying off the back. We're going to look at a few different assets. We're mainly going to focus on euro dollar. That's what we've got on the charts on MetaTrader 4. By the way, I'm going to throw a link up onto the GoToWebinar app at some stage during the webinar, which will be a link to sign up with forexcube.com and get a demo account or a live account registered with them. Okay, so you can click on that link, follow up, and register. Use a demo account. If you're not ready to trade live yet with real funds, then you can most certainly use a demo account. But of course, you know, you can also get in touch with us at swaphunter.com and register on our website, and we can talk to you about the benefits of swaphunter.com, the benefits of using us, the services we provide, so on and so forth. Okay. So you know, it's a bit of a waiting game for the next sort of 20 minutes. We are going to basically move into discussing the labor market as a whole in the United States. Okay, so it's very, very strong. It's extremely strong at the moment in the United States. The labor market in general is the strongest it's been, I think, since World War II. Okay, so we're at an unemployment rate right now of 2.9%. Okay, so according to the United States Bureau of Labor Statistics, there's only 3% of Americans that don't have a job. Okay, so whether or not you believe that figure is debatable. You know, I don't. It's in my opinion, I can't see how there's a 2.9%. You know, 97% full. That's full employment. That's pretty much every single American has a job. Now you only have to read news articles and have a look on the news that can't be true. But that's just my opinion. You know, who knows exactly what's going on. However, the point is that when you reach such a highly full, you know, high level of full employment, is it sustainable? What do you think? If you think it's sustainable and you're watching the webinar and you're taking part, then throw your opinion across in the live chat on GoToWebinar, and we'll see what you think. You know, but in my opinion, I think there's only one way. There's only one way to go from here, and that's down. So, and you can see as well, you know, the consensus for the NFP is pretty low. So, okay, that's the unemployment rate sort of covered here. Okay. My apologies. Unemployment right now is 3.5%. The average hourly earnings is really what I want to talk about next, actually, which is why I was so focused on this figure here. But 3.5, 2.9, there's not much difference. Okay, average hourly earnings really is what the Federal Reserve are now concentrating on. Okay, we're at full employment. It's 3.5% unemployment rate. Okay, and 2.9 is the average hourly earnings year on year. That's what YOY means. Okay, so year on year. This is another really important and more increasingly important figure. For me, it's more important than the NFP itself. Okay, so what does it mean? Is just you know, is Walmart increasing their wages for sort of the basic wage? Okay, so are they increasing these basic sort of basic wages? You know, are people at McDonald's getting paid more? People at Walmart getting paid more in the US? So the Fed are really looking and focusing on this figure a lot more these days. Okay, so unemployment rate 3.5%. We'll be looking at that. It's as you can see, a medium impact event. Labour force participation rate is also important as well. Average hourly earnings, that's a month-on-month basis, but the year-on-year basis, average hourly earnings is a little bit more important. It gives a sort of, you know, a longer look back into the history. So we're going to be looking at those shortly after, or an hour or two after. Well, about an hour and a half afterwards. After all the jobs data comes out, we're looking at PMIs, which are sort of these manufacturing datas and ISMs as well. Okay, so ISM manufacturing. Now these are also going to be really important. So we could get a massive spike if there's a better reading, which I'm predicting that there probably could be a better reading because the the prediction is so low on non-farm payrolls. Anyway, we're going to go into MT4 now, and I'm just going to show you how we're going to set up our trades on MT4 and on the euro dollar. Okay, so that's what we've got here. These are some trades that we already currently have running using our swap hunter package, and these are essentially I just want to mention actually at this stage that using the swap hunter indicator, we don't concern ourselves too much with these high impact events like non-farm payroll because we're hedged, okay, or at least sort of 95, 85, 75% hedged on assets like pound dollar and pound Swissy. As you can see, a sell, a buy, we're hedged. Okay, you can see the profit and loss is, there's not a huge difference there. Maybe 1% in relation to the balance and equity of this account. And then we've also got euro dollar and Kiwi yen, euro dollar Kiwi yen. What we focus on at Swap Hunter is collecting swaps, okay, at interest rates. In this environment today, you've got no interest at the banks. The banks are offering no interest rates, okay? So that's what we are offering using the Swap Hunter indicator. We're offering the opportunity for you to hedge yourself on the markets, really not have too much concern about these high impact events, remain hedged, and because you're hedged, you're not too bothered about these types of events, okay? They're still important. They can cause a lot of volatility, which can throw out the P&L on these trades. But like I said, when you're hedged on the markets, you can be a lot more relaxed as opposed to just taking a bet one way on trying to predict if the non-farm payroll is going to beat the consensus or if it's going to be a complete flop and it's going to be less than the consensus, which is 89,000. So what do we think? Okay, so General Motors, we're going into fundamental analysis a little bit. There has been huge strikes there. The auto car sort of manufacturing factories and the workers there, they're getting together, their unions, they've been striking, so this could be a really bad NFP. If it's a really bad non-farm payroll, if unemployment goes up, if labour participation rate goes down, if wage growth goes down, this could be really bad for the dollar. The dollar has been at all-time highs. You can look at the dollar index to check that out. It has been sort of retreating a little bit from its highs. As you can see on the euro dollar, dollar's been going up. We're on a day chart here, so 1, 2, 3, this all week pretty much the dollar's been going down, which means the euro dollar is going up, okay, because the euro is the base currency in this on this pair, and the dollar is the counter currency, or the second pair, or the second currency in the pair. So what are we looking at here? Okay, we've got the Swap Hunter moving averages. Okay, these are assorted exponential moving averages. We've got our Fibonacci levels, obviously standard for MetaTrader 4 and most trading platforms. We've also got our Bollinger Bands. I'm just going to go into properties and make those a little bit thicker, okay, so that we can see them a little bit better. Okay, and we also have stochastic, okay, our stochastics oscillator. We have MACD, moving average convergence divergence, and we're also going to use relative strength index just to gauge when the data comes out how we're going to move in regards to what these indicators will tell us is whether or not the euro dollar has become overbought, oversold. If there's a huge miss or a very bad print on the non-farm payroll right now, what we will see is euro dollar probably spiking up to, well, at least 112, I would say. Okay, so we could see a spike to 112, 112.50. Now, back in the day, a long time ago, say like 5 years ago, when I first, started teaching and training and all of that. But let's say even further back, so more like 10 years ago, when the non-farm payroll was coming out, it really was the Super Bowl, World Cup, FA Cup, whatever you want to call it, of trading events. And you would see the euro dollar move, and we were talking sort of around sort of 2010 sort of time, 2008, 9, 10, you would see the non-farm payroll data prints come out, and euro dollar would move 300 pips, 250 as a minimum. As a minimum, I would say on average, I would seriously doubt that we're going to see a 200 or 300 pip movement today. I would probably say that we're going to, because of the current market environment, the fundamentals out there are really scary. Negative interest rates, low interest rates. The Fed just cut interest rates on Wednesday. So there's, the VIX is a little bit low at the moment as well. The volatility index a little bit low. So we'll see what happens. My prediction is that it's going to be a bit of a mixed report. Okay, so I'm going to make a prediction. Okay, that based on the current market environment and based on the fact that the consensus for the non-farm payroll is so low, is that on the NFP we're going to get a miss. Okay, so and that's a big prediction. Okay, okay, so we got 9 minutes for the data to actually come out. Okay, 8-9 minutes until it comes out. The consensus is very low. We have the strikes with General Motors. We have other issues going on. We're at full employment with the unemployment rates at extremely low numbers. So I'm going to take a prediction here based on the fundamentals and the worsening situations with most data points. Okay, so manufacturing, global economic slowdowns, so on and so forth, right? And I don't think average hourly earnings, that could be the only positive point that comes out of this jobs day. Okay, so what I'm going to go for, a euro dollar buy. Okay, so I'm going to select my trade value or trade size based on my account balance and equity. So $100,000 this account started out as. We mainly only use this account for swap hunter trades, okay, but we do also use it for the webinars and to make demonstrations with. Okay, so I'm gonna go with a prediction. I'm gonna try and enter a trade before the data comes out. Okay, because by the time the data comes out, there will have already been a spike. It would have, the euro dollar, if it's a miss on NFP and I haven't put my trade in before the data, the non-farm payroll data is a miss. Euro dollar's already moved up 100 points or 100 pips, and I've kind of missed my opportunity there. So I like to get in before the data print. So we're going to go with 0.2, so 2 mini lots. Okay, so that's a $20,000 trade. I'm going to put a stop loss on it at this Fibonacci level and just where these moving averages, the swap hunter moving averages, are converging. So I'm going to risk, if you look further to the left of the screen, you can see that the stop loss is 135 or minus 135 US dollars. Okay, I'm going to go just below actually, because what tends to happen is that we will find we could find a spike down to here. Market makers like to knock out people's stop losses, and then you'll see a massive spike upwards. So I'm going to go a little bit lower, but I'm going to put my take profit at let's say 112.75. Okay, so that we're at a sort of resistance level here. We've got a resistance level, so that is worth. This take profit order is 200. Let's make it 250, a nice round number. Okay, roughly 250, and we've got say 172. So we've got a sort of like a 1 to 1.8 risk to reward ratio. Let's call it 1 to 1.5. Okay, so I'm willing to risk $172 on this trade, but I'm willing or looking to make 258. Okay, so let's make the maths even easier. I'm going to move it up a little bit higher to this resistance level. Okay, so we're going to go for a very ambitious take profit order here, but I want my risk to reward ratio to be like 1 to 2. Okay, so I'm risking roughly around $150 here. Let's say it's 172, but let's say 150, and I'm looking to make around 347. Okay, so 172 to 347 is pretty much exactly 1 to 2. I'm willing to take that risk, and it's a good risk to reward ratio. I'm not going to be you know, crying myself to sleep tonight because I lost $172, but on the flip side, I'm going to be pretty happy with a $350 profit. Okay, so 3-4 minutes to go to the non-farm payroll results coming out. We will take a look at some other assets as well. We will take a look at gold. We'll take a look at the S&P 500, and we'll see how the jobs data reacts. I'm going to go into Bloomberg now and just have a quick look at what they're saying on the live news. So I'm going to pop in there because I like to. You can sometimes get a bit of a delay using you know, myfxbook, Forex Factory. There can sometimes be a delay. Okay, so we're looking at Bloomberg.
To many recessions in the past, 10-year Treasury yields are ultimately going to trade.
We're going to see the data print, and they will have it maybe you know, exactly the same time, maybe a little bit before, but generally we should be able to see our okay, so okay, so data's coming out.
You want to write essays that inspire and messages
very soon. So as I've mentioned before, I mean, do expect major volatility from this event. Okay, what I'm trying to do here is just set up a trade before the data comes out, but I'm also doing that. I'm guessing what the data is going to be based on the consensus. I mean, if it is lower than the previous, it's bad. If it's lower than the consensus as well, it's really bad. Okay, average hourly earnings, we will be taking you know, a closer look at that as well, and but I'm expecting a kind of mixed report here. Okay, so let's just see what happens any moment now. 1 or 2 minutes. Alright, here we go, countdown. As you can see, you know, it can be very high pressure trading this way. This type of live event trading can be very high pressure. If this is the way that you like to trade, that's great. If you like the adrenaline rush of it. For me, I prefer to wait for the data to come out, the spikes to occur, and then to kind of react on the reversals. So we're going to try and do that as well. We're gonna do the conventional way. We've set up a trade. We're gonna do three ways. Okay, so I've set up a trade as a guess. I'm predicting what the data is going to be. I'm going to wait for the print, and then I'm going to place a trade based on the print as the data comes out, because that's how your broker, whoever you're, you know, if you're a complete newbie to this, they'll tell you, yeah, use the economic calendar. It's really easy. As soon as the data comes out and it's positive. You know, if it's a positive read for the dollar, then buy the dollar. Okay, but it's not that simple. But I'm going to do it anyway. So as soon as the data comes out, if it's a beat, of 89,000. I am now going to I'm then going to sell the euro dollar based on the data. Okay, so data's out. Weekly hours, average hourly earnings. It's all pretty positive. Okay, we've got non-farm payrolls much better than the forecast. Okay, much better than 89,000. It's 128,000. So I'm going to start buying the dollar, which means I'm going to start selling euro USD. Okay, it was all pretty positive from what I could see there. All green, lots of greens. The only thing was average hourly earnings was a decrease. Okay, it was a miss. So we've got 0.2% as opposed to a prediction from the US Department of Labor Statistics, Bureau of Labor Statistics. They were predicting that it would be 0.3, but it's still a beat from the previous month. We've got the previous NFP last month was 136,000. The consensus was 89,000. We've got 128,000 on the actual print, and that is pretty good. It's not amazing, okay, considering the last one was 136. We've had 250,000, you know, I believe it was August. It was a very good read. I'd have to double check that, don't take my word for that. But right now we're hedged on the trade, apart from the stop losses. So what I'm going to do is I'm going to take out the buy, because the non-farm payroll is so good. We're currently losing $44 on it. I'm going to take a hit. Okay, now, should I have done that? We'll have to wait and see, because yeah, it was a strong report, but like I mentioned at the beginning of this, non-farm payroll has become less and less important because we're at full employment. Okay, so you know, newer and newer jobs being added. Let's just let's see what they're saying on Bloomberg.
In October, and there were some revisions, and they were notable. August revised up by 51,000 jobs from 108,000.
Okay, so we have a spike on the indices as well on the stock market because of a good jobs data. From
136,000 to 180,000, those gains combined.
Okay, sometimes you do get revisions from month to month as well. Okay, so revisions jobs August to September combined 95,000 jobs to August. Okay, so they revised the August September NFP. Okay, so payrolls rise 128,000, estimated 85, 89. These are you know, small differences that you get. So the markets are liking it. We can see S&P futures there on a bit of a rally. Okay, I'm just checking my Twitter feed here to see if we've got anything that that shines a light on anything that I'm missing. It all looks very positive. So we probably could expect a dollar rally from here, but like I mentioned as well at the beginning, I mean, we have okay, so we also have 2s and 10-year yields, treasuries, US bonds. Okay, they're down in price, which means their yield is going up, which means that the dollar is gaining in value. So people are looking to move money into the dollar right now, which is a double-edged sword. Okay, now for currencies, euro, US dollar, it's very simple. If the dollar gets stronger, the euro dollar will go down. Okay, because the dollar is getting stronger against the euro, so the exchange rate will go down. Now it's a double-edged sword when it comes to equities and indices. Okay, so a much stronger dollar right now could mean that could mean an initial spike to the upside, but then what we'll see is people moving money into bonds and treasuries, which are much safer, safe haven assets, and they'll start getting out of high risk assets like equities, like Dow Jones, like S&P 500, like the Nasdaq, and we'll start seeing you know, we'll start seeing those reverse. It takes a little bit of time. It's not going to happen, you know, in a matter of seconds. But yes, it could most certainly be an issue. So let's have a look at equities very quickly and see how they're reacting. Okay, so we've got DAX there, S&P 500. Yeah, it's on the up. If we go down to a much lower time frame, you can see that we're having big spikes here. Dollar yen, it's gone up as well. So how long will this last? For me, I don't think this jobs report is I don't think it's a major hit. I think it's kind of it's positive. It's overall positive. Okay, it's just what bothers me just a touch is that we're at full employment, and how much better can it get, and you know, how long can it last that you know, unemployment goes down, non-farm payrolls keep going up, you know, the dollar is at an all-time high. You will find a lot of people, you know, a lot of people will start betting on the dollar now. But these events tend to be short-lived, and market makers out there like JP Morgan, Goldman Sachs, Bank of America, you'll find them wanting to hit people's stop losses and things like that. And you can see from the euro dollar, as soon as I placed my sell trade, we're on a 15-minute chart now. We were on a daily chart. Now, a strong jobs report. Overall, everything was good. Labour participation, wage growth, non-farm payroll, all positive. The only miss was the month-on-month average hourly earnings. So yeah, okay, this is it's a pretty strong jobs report, but do bear in mind that coming up in the next hour is the manufacturing data. Okay, so we've got ISMs, PMIs, we've got a member of the Federal Reserve, and another 2 members of the Federal Reserve, 3 members of the Federal Reserve coming out and making speeches and discussing monetary policy, and you know, on Wednesday they cut interest rates again for the 3rd time this year. Okay, so non-farm payroll for me is not that important. Okay, I'm more interested in finding the reversal on this trade. I'm more interested in finding everybody going woo, and the mass hysteria of like a great NFP. Wow, let's buy the dollar, even though they just cut interest rates so by 25 basis points. So now, you know, we're at 1.75. People are going to jump into this trade. Retail traders, okay, so retail level traders are going to jump in on this trade. Yeah, okay, we could see euro dollar come back down to test this retracement level, 38.2% FIBO retracement level. It's already crossed through all these moving averages. Not on a daily chart though. I mean, on a short-term chart, 15-minute chart, yeah. Okay, so big deal. All right, so we went from 111.50 to 111.33. So on such a great NFP report, such a great jobs report, the euro dollar has moved 20 pips. Big wows. Okay, so what does that tell us? It tells me that the non-farm payroll just really is not that important anymore, and jobs, the labour market is being stretched. It's at full capacity now. So what I'm expecting from this, considering they cut interest rates at the Fed on Wednesday, considering we've got manufacturing data coming out in about an hour's time, I'm more inclined to start buying the euro dollar and just generally start selling the dollar, and also start selling indices as a whole, start trying to catch the reversals on the S&P 500, on the the Dow Jones. I'm more interested in that. Manufacturing data, global economic slowdown. I don't hold much gravitas. I don't think the NFP holds much gravitas in these situations. Okay, silver come down a bit. Gold will have done the same as well. So what I'm more interested in now is looking for where to find the reversals. Okay, so if we just go back to euro dollar, like I said 10 years ago, a report like this would have moved the euro dollar 200-300 pips, and what do we see today? 20-30 pips. It's marginal. It's boring as well, you know. I mean, it's like what are you going to do? What are you going to do with 20-30 pips unless you're trading super high leverage? And I can't see this continuing. So what I'm going to look for now. Let's go on to a slightly higher time frame. All right, yeah. I mean, we could see more downside on the euro dollar. We could see more dollar strength. We could see another 50 pips. Anything is possible in Forex, okay? Anything is possible. But Donald Trump, there was a vote to start the impeachment process, or at least to make it a public sort of process yesterday. We had China saying that they are not interested in doing a deal with Donald Trump, or they might sign the phase 1 of the US-China trade deal. I don't know what that means. Nobody does. In fact, there's no details on what the phase 1 deal includes. None of the tariffs have been lifted off of China. So all of the fundamental fears out there are still there. So in my opinion, excuse my French, but screw the jobs report. It's really not that important at this stage when the US is at full employment already. What's it going to do? Is it going to boost the dollar and boost the S&P 500 by 5-6% over the coming weeks? You know, I really don't think so. I personally believe there is a risk off trade coming in right now. I personally believe, in my opinion, you don't have to trade on what I'm trading, but in my opinion, we get an initial spike. Let's go with S&P 500. Okay, we get an initial spike on good jobs data. Within the next 45 minutes, you're going to see that ISM and manufacturing data, and if that's a miss, way more important than jobs data. Any more fundamentals that come out of China, way more important right now. Any more news on the Donald Trump impeachment, way more important. 20-30 pips on a non-farm payroll beat 90,000 to, what was it exactly, a beat of like 30, 90, 40,000. Okay, so 45,000 new jobs added from well, actually, if you look at the previous month, it's actually worse than the previous, but the consensus is a beat by 40,000. The previous, it's actually worse. It's thereabouts the same, 8,000 jobs. It's nothing on an NFP result. So don't get too carried away with this result, and don't start betting the ranch, as they say in America, or the whole don't put all of your equity on this one jobs report. What I'm seeing here is a good opportunity to start selling markets, S&P 500, which is at all-time record highs right now. So start looking for opportunities to start selling S&P 500. We're seeing euro dollar really, going nowhere right now. So for me, it's a bit of a muted, bit of a non-event, I'm afraid. It would have been much more interesting if it would have been a miss. It would have been much more interesting if the print had come out at like 75,000 or 50,000, and we'd seen a massive spike on the euro dollar, which would have given even more reason to start chasing this what looks like it could be an uptrend. Okay, so this move from like 108. 108, 109, you know, now up to, let's say, 112, just round it up, okay? Just round it up to 112. And 111.38, okay? 30, 40, 50 pip movement on the non-farm payroll. So, you know, like I said, big wows. Nothing huge to report here, in my opinion. Like I said, what I'm going to be looking out for the rest of this evening is basically trying to find, you know, an entry back in to start buying the euro dollar. Okay, so buy the euro dollar. I would also look for a yen trade, a dollar yen trade. I would look for this risk off sentiment that seems to be building up again, as it did do at the end of last year. You know, these are sort of, we're looking at S&P 500, like dollar yen. The Japanese yen is a safe haven asset. Okay, so we've seen this spike on NFP. Now we are going nowhere fast, and I would say that if not today, then look into early next week for definite dollar downturns and the dollar selling off. I don't. Yeah, there's not going to be any major dollar buying off this report, but you know, just basically keep your risk management in check. We can see now, as I was saying, we're looking at a possible reversal on the S&P 500. So I'm gonna take a little punt on that. I'm not gonna take a huge bet. I'm gonna put my stop loss very close, okay, because it was a positive report. Okay, so we're gonna try and make some money off of this trade. Try and catch it where it came before the report came out. Okay, we're also going to go for a dollar yen reversal trade. Again, I'm going to put my stop loss just here where the initial spike came to 108.30, and it is a bit of a sort of soft resistance level. We're also going to go with a higher time frame to try and catch through the week, okay, through the next 7 days, and based on what I think the manufacturing data is going to be way worse. And we're also going to go the other way on euro dollar, because I'm not convinced by this jobs report. Positive. I'm going to go with a contrarian trade. I'm going to say, wow, you know, 40, 50 pips on a strong jobs report. There's more important things out there, okay, but this is just to demonstrate how to use the economic calendar when you're trading on events like non-farm payrolls, interest rate decisions, so on and so forth. But just keep in mind that the market makers anticipate the anticipation. Okay, so we had a beat. The dollar has strengthened slightly. Euro dollar's come down. Okay, so bear in mind that the banks know what you're going to be trying to do, and the idea of Forex is that you have to try and beat the banks, and you have to beat the fact that they're anticipating your anticipation of the markets. Okay. No, it's cynical, but after 10 years of trading, believe you me, it stands to reason. So we're pretty much hedged on the euro dollar, but I just cannot see the euro dollar breaking out of this nice upward forming trend, because the Fed, the Fed have cut rates, but they also indicated that they're going to pause. They're not going to cut any more. So, you know, that could indicate a stronger dollar for, but that could change. They could cut rates again if the data gets worse, manufacturing data especially. Okay. So I am going to get out of this sell trade on euro dollar. I don't think it's got legs. I don't think it's going much further down. And pretty big bets on markets and indices to start reversing from this initial spike from the jobs data. So let's have another quick look at dollar yen. Another quick look. And I just want to point out again that with our swap hunter package, these trades that we have here that are hedged really haven't been affected by this event whatsoever. Okay, the whole point of what we're looking for every night at Swap Hunter is to make interest on our hedged positions. These trades down here are like beginner trades. Okay, this is how I used to trade 10 years ago. The reason I'm placing these trades, I don't think I've actually traded like this on you know, I don't think I've even traded on non-farm payroll for like 2 or 3 years now. But I want to show you how it's possible to trade on live events, and how you will be taught, and how you should react, or at least how I react to them after 10 years of trading. But I mean, let's see. Well, like I said, I like to wait for the data to come out, initial knee-jerk reaction, then the market makers will come in and start whacking out people's trades, their stop losses. They'll start reversing the prices very quickly after you've placed logical trades based on the data. But they know that everybody's going to go the same way. They know that everybody's trying to trade the same way. And do the banks want everybody to win? Another question for you. No, it's self-explanatory. It's a rhetorical question. Of course, the banks don't want everybody to win. If everybody won, then the banks would be out of business. Okay, market makers, Goldman Sachs, JP Morgan, they don't want everybody to win. So what they'll do is they'll push, you know, the price down just enough based on the data. Now we're hitting a kind of support level right now on euro dollar. So what I prefer to do is try and beat the markets by reacting after the data has come out, 1 or 2 hours, even a couple of days after the data has come out, and the market makers have said, right, that's enough sort of excitement for all the retail level traders, and let's start clearing them out, cleaning them out with well, essentially market manipulation. Okay. So look, I'm going to have to sort of start wrapping things up now, and I'm going to leave these trades open for the next week or so, and see how it goes at least throughout this evening, because I'm really anticipating that the next set of data, this ISM manufacturing PMI data, I'm hoping that's going to be pretty negative, because that would work for my trades. It would work for a weak dollar. It would work for anybody who is on the same page as I am in the knowledge and in the belief that we are in an economic slowdown, and that's where we're headed. So weaker dollar, weaker markets, reversals on the indices, S&P 500, Dow Jones, Nasdaq, DAX, European indices, global growth slowdown, low interest rate environments, negative interest rates in Europe, you name it. There is a lot of negative stuff out there. US-China trade deal, more and more tensions increasing. So use your instinct. Use all the information that you can gather. I'm always available, you know, on our social media platforms, on Facebook, on YouTube, on Twitter. You know, for you to get in touch with me. You can go and what I'll do now is just sort of cover the sort of main benefits of our partners, Forex Cube. So I'm going to leave MT4 right now, and I'm going to go into back into our sort of presentation. We'll see how these trades turn out. You know, strong jobs report, but we're going to leave it there for the trading part of it. So essentially, if you're watching, you should have seen the link to register your details with Forex Cube, where you can get an account with them. Great brokerage, great trading environment, superb execution, true STP, ECN broker, high leverages, 400 to 1 leverages. You know, your funds are insured up to $20,000. Instant deposits and withdrawals, some automated trading solutions. They've got some algo tools there. They've also got fantastic customer support, great team around in the Forex Cube office. That's why we partner with them. That's why they offer. They also know how innovative and how unique the Swap Hunter tool or indicator is. So that's why they partner with us. And yeah, we hope that you'll be able to get yourself registered at Forex Cube, and I will be getting in touch with you, and we can have a chat about what is possible, and then we can take it from there. But I'm going to leave it there for now. Thanks for attending. I'm Christopher Smilas, Head of Training and Sales at SwapHunter.com. Have a great afternoon. Have a great evening. Have a great weekend. And for any more information, go to our website. Hit us up on our social networking platforms, social media platforms. And yeah, hopefully we'll chat with you soon. All right, all the best.